Hello, ladies and gentlemen. This is Thomas Fross here with Fross and Fross Wealth Management, where we continue to try to be the voice of reason in a world full of the pundits of pessimism and the wall of worry. As always, please make sure you read the disclosures that were attached to this video, or if you happen to be watching on social media, you can simply go to www.frossandfross.com and read any of the disclosures that you might find therein. So on Friday, we got a sneak peek at the October jobs report showing that non-farm payrolls rose by 150,000 new jobs for October, which sounds fantastic, but that was 20,000 fewer than what analysts had expected. So here's the premise. Sometimes bad news can be good news, and good news can be bad news, as long as that bad news is not too bad. So even though the report showed that fewer jobs had been added than what had been expected, it's certainly not all bad news. For the Federal Reserve, this news means that hopefully they don't have to make any big changes right now. They can keep watching the economy without continuing to raise or at the same time lower interest rates, which can affect borrowing and spending for all of us. Now, some experts, they thought that this report was what the Federal Reserve had been waiting for, a sign that the job market is finally beginning to slow down just a bit. This, combined with other not so great economic news, can make the Federal Reserve less likely to be as strict as they have been with interest rates. The report had various effects on financial markets. Traders in financial markets reduced the chances of interest rates going up in December, and they started thinking that there might even be a cut in interest rates as soon as May of next year. But here's the tricky part. If the Federal Reserve does indeed begin lowering interest rates, it could mean that they're worried about the economy and that the economy is doing much worse than what they want, which is what everybody really wants, is a stable and growing economy, not one that's getting worse. So for all of us investors that are hoping for lower interest rates, we need to be careful what we wish for, because it might indicate economic problems. Now, even though the markets are guessing that there will be a rate cut sometime next year, recent statements from the Federal Reserve officials suggest that it's not going to happen anytime soon. The head of the Federal Reserve, Jerome Powell, said that they have not even begun talking about cutting rates. And another official, Thomas Barkin, also said that it seems like a rate cut is a far, far period off, depending on various situations related to the economy. So what does this mean? Well, can bad news be good news? Well, if it's just a little bit of bad news and it means that the Fed can pause this aggressive rate hiking, then that could indeed be good news for the U.S. economy. As always, please enjoy the rest of your week. If you have any questions, please feel free to reach out to our office, 352-205-7800. We look forward to seeing and talking to all of you soon.